Good morning, everyone, and welcome to the European crossover webinar. And it's been a fairly eventful evening or morning, depending on what part of the world you're in. We came into Asia, and the S&Ps were under pressure immediately. But once the Chinese markets got open, then that's when all hell broke loose. And we had, pretty big fall. We'll go on and take a look at those real quick. You can see that on the composite, we took out some key support. We were coming right into support. Looked like, potentially maybe we'd get in an interest rate cut and reserve ratio cut by the PBOC. We certainly didn't get that. We are coming into some additional support here at 3,200. Looks like we scooted off that just a hair. You can see right here, coming right here at 3,200. Also, the Shenzhen, this one also got hit pretty hard too. I mean, it really was across the board, but here we are also on this one going right through. We were actually on support here on the Shenzhen. I thought potentially the PBOC might come in maybe a couple of hours after the open and step in and take some action, especially since we had the Shenzhen already on support on Friday. But the selling was so overwhelming. To be honest with you, I think they got stunned by the whole thing. And weren't able to go on, and I think they probably just froze here. And you can see we fell quite a bit here. And this is on the Shenzhen. We just took a look a couple of moments ago at the composite. These markets are closed, but they've had their biggest fall since 2007. As we go on and come into news here on China, like I said, it's literally been a bloodbath. I think I saw a headline, they're calling it Bloody Monday. It's just been a complete wipeout over there. They were down. They actually halted the market. It was down the maximum 10% on the futures indices. So it's, like I said, it really leaked over there into our markets and basically across the board. So it's been, and we can see here the Hong Kong stocks also fell for the 7th day in a row. It's just been something else over there in Asia, but primarily in China and also in Hong Kong, where they've really sustained some really huge losses, to say the least. I think it's pretty obvious to everyone. I mean, everybody's seeing this come across either Twitter or your news services, to the extent of the fall that we're seeing here, in China, and how it's impacting the rest of the globe. And we had talked about this, for a while, is that with the exports being down 8.1%, worst export number since 2009, it was just one after another, and the commodity prices were falling because there just wasn't any demand. They've had a lot of problems domestically with their economy, and they've got far bigger issues, demographic issues. It was certainly something that was going to come to a head, and it came to a head in a very large way. So that's about it. We can go on and take a look at the news that's coming up. And we just have the National Activity Index coming up here. Really no big impacting financial news here in the States. And we can go on and move into to the FX pairs, and also we'll take a look at the SPUs. I guess first off, we'll go in and start off with the euro dollar. And we're right up here, ticking up here against the 115. We've kind of darted back and forth. I mean, once China got open, all hell broke loose. You know, we got past this 114, and then it just started skipping away as we moved into China. And then it was just Katie bar the door at this point. On the 30-minute, though, we have a level here at 1512. The market just barely got up to this 115 and pulled back. On the 2-hour chart here, we're looking at 1545. We can pull this out a little bit further. To see what we're looking at. So we're right up here at the 115. You know, we're not close to knock on the door here at 1481, but we were, you know, you can see here this 1494 is pretty huge, which is basically 115. As we pull back in here, you can see this whole area right in here, this 115, is really going to be a solid line of resistance. Doesn't mean that we can't overshoot it as we did here, but you can see here that this basically caught the bottom on the way down, at least temporarily. And then as the market rebounded up here to 1640, and actually even got beyond that, got up here to 1679, and then cascaded back down. On the way back up, essentially 115 was resistance. I mean, there was a little bit of an overshoot, almost to this 1545, basically looks like about 1535 or so. And then the market held it. We got back below it, and then 115 held again. And then most recently, we had that run up here in May, up here to 1467, or 1468, I believe it was. So that's where we stand right now here on the euro dollar. They're trying to see if they can go on and get beyond this 115. They did make it up there, but they've been thwarted actually a couple of times here. We did get up here to 115. Market's still trying to go on and see if they can go on and push them up there. But like I said, we've got a little bit of a cross currents because the dollar's strong against the commodity-based currencies overall, like the Australian dollar, the Canadian dollar, the Mexican peso. But then against the euro, we've gone and come back. And part of that is that dollar unwind with the anticipation of lack of, in all likelihood, that the Fed will not be able to raise rates in September. Also, the euro's been a funding currency. So on the backdrop of this, you don't have those flows coming out. So that's actually brought the euro right back up. But I think it's a little bit overdone. I mean, we can certainly go on and scoot up here beyond 115, but I think it's pretty well overdone up here, especially as fast as we've come up. It doesn't mean that it can't go up a little bit higher, and it doesn't mean that it won't hang out in this area for a while. But once again, like I said, I think we've seen the bulk of this. The only thing you've got here is potentially some dollar bulls that just may have thought that without a doubt the Fed was going to take action, and they hung on, and maybe they're trying to see if they can smoke some more of these people out. But I'd be cautious. The only thing is, though, it's holding up relatively well against the euro pound. The euro's holding up well against the pound. Obviously fading back here against the yen, but holding up overall against the euro Aussie as well as the euro CAD. So you've got this this backdrop of support here across the euro, which they're pushing it up. But like I said, we've already come, the euro has actually gotten to the same level as when Draghi initiated QE in January. So it's basically all for naught in a sense, because they're going to go on and benefit from a weaker euro. And this is really the last thing that Draghi wants to see. That being said, once again, you'll want to go and let the market play out for 24 hours. I've gone and stepped in and shorted up in here a few times, done well. But as we come to the New York session, you kind of have to let them do what they want to go on and do. But the same token, you keep an eye on the euro pound, euro yen, euro Aussie, euro CAD. Go on and try and get a feel for, if they're going to be able to go on and really blow past here. Here we are here in the euro pound. I generally don't look at cross rates, but because it's such a strong move, I've used that as ideas of where the market might be getting a little bit tired, and use that to go in and step in and take the other side of euro dollar. But we're pulling back up here again here on euro dollar. Here we are on euro yen. Pretty big key level here, 39.35, 39.52. Right here. Now, when we take a look here at the cash dollar index, we've actually even gone below this zone here. So we're really pressing beyond here. We have this nice zone between 94.33 and 94.77, and 94.58 is the 78% of this move from 93.56 all the way up here to 98.33. But we've gone and superseded that, or gone beyond that. Right here, we've got a level here, which is going to be 94.03. If the euro dollar can go and push up to, let's say, that 15.12, maybe get up to 15.22 and come back, that may allow this market to go and come down here to this level, which I said is going to be 94.04. I'm going to mark that off real quick. But you can see we've come off quite a ways here in the dollar. You have to wonder, is as bad as things are across the board in these other indices, at what point do you see the dollar go on the bid? We're certainly not seeing this, and they're really getting that, like I said, the euros make the most of that move here, not only technically, but then you've got the idea of the funding currency. And here's dollar CAD. I'm looking at dollar CAD. It's creeping right back up here at the highs. So it's really an interesting cross current, the way that the dollar is doing so well against some of these other currencies, like the Canadian, the euro, the Aussie dollar, the Mexican peso, obviously against some of these other Asian currencies. But like I said, against the euro, definitely taking it in the chops here. We'll go in and take a look. I guess we'll go in and jump in here into the euro and take a look on the 30-minute and swing back and forth on these. So we've got the euro dollar right here. Here's the 14.94 that was pointing out. And basically right here at 115, and we're trying to push up a little bit high. I mean, we just had come off in that 115 area, and took a pretty good decent slide down here into the 50s, and here we are trying to mount up again. Now, what we could do is shoot past this 115 and come right back. Now we know that 1545 is laying here, just above the market, which is a pretty key level here. But so is 115 in and of itself. 1512 is going to be a minor level. Essentially what you'd be looking is to see how the market reacts. So if we can get above 115, what's the reaction when we get above 115? Since we got and made a challenge up here, but we didn't quite make it up there, since we didn't quite make it up there, but then we did make it up to 115 right here, just taking out the high by about 2 pips. and then we fell back a fairly decent amount, and then to come right back up. If we challenge you, then there's no doubt in my mind that we'll go in and blow right past you, and 12's not going to go and stop. But the extent would be is let's see how far we can go, and then you'd have to wait and see what kind of reaction that we would go on and get. Some people have talked that if we get a foothold above 14 even, maybe we make a run to 117. Yeah, I think that's really, I mean, their whole point is also that there'll be a lot of dollar bulls that could potentially go on and get skunked out. We can go in and take a look at that. I think that's really quite a bit of a stretch, though. That would really be getting overdone here. But in the type of markets you are, you have to keep an eye or keep an idea or an open mind that anything's potentially possible. So this keeps you from getting yourself hurt. So look, here we are. I mean, we've had a pretty big heck of a run up here so far. As I said, here's 1494. Here's 15 and a half, essentially, 1576, and up here 1640. There's just no way in hell I see it going all the way up to that 117. I mean, you know, one guy was mentioning he thought we can get well up here. I guess he's referencing here. I think he said 1740. I just don't see it. Frankly, I don't see it because ultimately the Eurozone has a lot of problems. I mean, you know, when a market gets really carried away like this, you know, you also have to maintain a perspective. You know that it can get scooting. The only thing I will have to give it some credence here is that if we get beyond 14, and here's that 1468, if we get beyond that, yeah, certainly they could go in and push up. And I kind of think that right here, the 1640 with 1679 here would really be an absolute squeezer. There's no way in hell I see this 1740 business. Just no way. I mean, you could see a little spike up in here, but this is, you know, like I said, this is pretty good area right here, just the 15. Because you look, we've come into the zone here, which is essentially about, what is it, 1272, on up to here to almost 15. It's 1492. And to go in and just blow completely through that zone, and then go in and blow through the 1640 zone, to then get up to 1740 is just, it's too much in my book. And even if we were to try and make a move there, I think you could easily get short euro and just hang on, because I'll tell you what, it's gonna be a whole heck of a lot lower as time goes by, because the difference is, once again, it's the euro versus the dollar. You have to be reasonable in the sense that the U.S. economy is doing fine overall when you're going to compare that to Europe, which still has a whole heck of a lot of problems. So the market can get going one way where it gets really overdone, but you have to have that perspective to look at a longer, bigger term outlook. I saw some people talking about 122. That's just plain crazy. It's just plain crazy. They don't have the economy to go and justify it. Not to mention, even if they try to get up in these areas up in here, it's just going to hurt the economy even worse. And I know you have those people that go in and say, you know, they don't export much. You know, I heard that, excuse my language, I heard that bullshit when the euro was trading in the 130s. No, euro can't work, Laura, because, you know, it's basically they trade within them. Yeah, well, I don't need to listen to that crap. I really don't. You were wrong in the 120s when we made all the way down. I really don't need to listen to you telling me that they don't trade. I really don't need to hear that. So, but like I said, so you have to be going to be realistic when we make this move. And you can't fight the train. It's pretty tough. I mean, I've jumped in here, and fortunately, I've just scalped it. You know, I guess through the years, I've taken my lumps and bumps. So you have to realize, especially on a day like today, even more so, if it was just a regular Monday, when I say regular Monday, let's say the euro was getting overdone, but on the back, we've got so many cross currents going on, is that when you make this move, there's going to be a lot of people that are going to be getting run over, and they're just going to be forced to go in and cover the shorts so we can get going pretty good. But like I said, when you look at it in the bigger picture and you say, wait a minute, the economy isn't in very good shape, how's it going to be able to sustain a move up in this area? You know, I mean, my point is that you just go and wait and let it play out, and then you go in and take your stand. You can do whatever you want. I'm just saying it's crazy, people talking about, you know, all the way up here to 120, between 120 and 122. That's the craziest doggone thing, because they just don't have the economy to go on and support that. The point is that if it were to get up there, it's just going to crush the economy, and then you turn around and see the euro start heading south to the South Pole again. But that's what we're looking up here, and potentially in the New York session, we can get scooting up here. Maybe we do go on and make that run up here to 1545. Up here as they just go on and maybe try and push some stops even further. Yeah, Ben says if we get to 117, the DAX will have to drop another 10% if we consider it in a funding currency point of view. Yeah, you're right. I mean, well, the thing is, what they've noticed is, which they got that correlation. It's or in a sense, it's going the other direction, and that's been a little while, and it's kind of gone off and on. But yeah, when the euro's rallying, it's hurting the DAX, and the opposite. When the euro's falling, it's helping the DAX. But it's just going to cause. It's going to go on and no one's going to go and forget that correlation or anti-correlation, whatever you want to call it, about that play. And it's really for good reason when you think about it in the overall, even if you forget the funding currency bit, is that it's going to impact the economy. And I'll tell you why, and why I'm pointing that out. Back in late December, when crude oil had already, was really falling in the toilet, I had said that in late spring, you're going to see some surprise economic numbers coming out of the Eurozone. And sure enough, here we were, and we made this nice run up. And there we were, late spring, making this run up here. Problem is the reason why I got so bearish up here is because then crude started turning around and started going up. At the same time, well, not at the same time, but before the euro was making the run. So I said, which I've shared this before, I said, we're going to have some bad economic reports for the next couple of months going forward, which is exactly what came into fruition. So I've got some, I wouldn't call it data, but some experience as to where this played out to go and lean on and say, hey, look, we're looking at the same thing. If the euro gets way overdone and sits up there at 117, it's going to hurt the economy overall. And like I said, we're back to the same levels when Draghi initiated the QE, or right about that area. Yeah, it actually was right here, basically. So it's like it's almost all for naught. And this is the last thing that they really need, is for the euro to be right back up here. And when you think about it, like I said, one of the reasons was, well, the dollar was so strong is because they expected the Fed to raise. But the reason they expected the Fed to raise is because the economy's doing well overall. But you don't have the Eurozone economy doing well. So for this to go on and rally up like that, it's really going to go and hurt the economy. That's why you just need to, it doesn't mean you go on and step in and start shorting it right here at this moment. You just have to go on and when you get these moves and if it does go on and get above 15 and maybe it sits up there and gets a little bit overdone, you just have to have that in the back of your head and say, let's let this week sort of play out, or let's let the next 48 hours sort of play out and see what happens. And, be cognizant of that idea that the economy overall in the Eurozone is fairly weak, with the exception of Germany, obviously. Remember, France, their PMIs are below 50. So, how the hell is that supposed to be any good? And, Italy's had their problems. The only one country that's done overall fairly decent is Spain, and they still have high unemployment. So that's what I'm saying. You kind of look at those things, you keep a perspective. Yeah, the market's going to go and run. Technically, it's got that. It's get out, everybody's got to get the hell out of the way. But you got to have some perspective and, not start throwing on your Euro 120 hats. So I'll see what Donald says. Good morning, Polly. If you back your weekly euro dollar to 2001, you will see a head and shoulders with the neckline broken around 1850 to 1900, which would correspond with a 38% retracement from 140 to 105 down leg. So let's not be surprised if the euro goes up and checks the neckline in a not so far future. Anything's possible. That's what I'm saying here's my thinking. Here's what I'm saying is, I really don't see it making this move up here, 1740. But anything's possible. That being said, if it makes this move up here, it's not going to be able to stay up there for long. So you're right. So maybe they may not even make it to the neckline, but it goes towards the neckline and then turns around and then quickly loses steam right quick. Right now we're making new highs in the dollar CAD. We got a $38 handle on crude. I'll tell you what, I am taking my time here and getting ready to go on and we're almost at break time, is because Blake's internet's down. So I'm going to have to go on and cover, obviously I'm going to be covering the European crossover webinar, but I'm also going to have to I'll be covering the first hour of the morning edge. And then Steve Bilby's going to cover the second hour of the morning edge. So I'm kind of, letting everything, going into detail and stretching everything out. I don't want to cover everything in one fell swoop and have to go and do it all over again here. Now, I did notice here's the dollar yen. We're really dropping pretty far, but we're dropping into some key support here at 2014. This is that zone. We'll go and pull this out. You can see this is a pretty key zone here, this 2014. Doesn't mean we can't overshoot it, but you can see the significance right here. And we've fallen. We've fallen like crazy in this market here, but we're right here at that level. 2014, actually 2013 right now. We could certainly overshoot it, but look here, we've come down. We've just blasted through levels. This is where we were in Asia. I don't know if some of you guys traded, but I was trading Asia, and we were right here. That's how far we're just clipping along. One of the things I'd be looking for, and I've kept an eye on, euro dollar's right up here at 114, probably close to 115, is that I've kept an eye on what we're looking at here. I looked at dollar yen to see if the dollar's kind of stabilizing against this. At the time, at different times, it was stabilized a little bit, and I would take the other side of the euro dollar, but we may want to go and blow past 119, and here's 119.84 to get past the handle, the 120 handle, which would be big. Beyond that, it's 1962. So we're going to go on and take a break right now. Like I said, it's going to be I'm going to be going for 2 hours. Going to have to go on and cover the first hour of the morning edge. Blake's internet got knocked out, and they sent a service guy there, and it's even questionable if he'll be even ready by the lunch money webinar. And if not, then Steve Bilby's going to do lunch money. So let's go on and take a break here. I'll just leave this here. You can see here your dollar was pressing at 114.96, and then now here's dollar yen popping up a little bit, and your dollar just came down to 14.90. Obviously, it doesn't seem like much, but you can see how the markets, they're all kind of looking across each other, looking at all the different pairs and screens. So let me go and take let's go and take a break.